I'm here with CEO Rikke Stampe Skov, CEO of Impero. You just released your 24 figures. 28% top line growth, both on the ARR, which you measure on the revenue side. But let's dig a little bit into those numbers. What are driving this growth?
I think there are several items driving it. So we have landed new enterprise customers, both in the Danish market, but also abroad. So we've seen really good traction in the German-speaking markets, especially Germany and Austria. We've also seen strong uplift from our existing customers, and on the plus side as well, we've seen a really low churn.
Okay, and the market growth, has that been kind of stable this year or challenging?
I think it's helpful to be in a growing market, to be honest. But we're growing faster than the market, which is definitely also our ambition.
And looking at a software as a service company, there's one measure we always ask the companies about, the churn. That tells you about how are your customers using your system and are not leaving it. So it's a very good indicator. So how has that factor developed this year?
We went from 6% by the end of 23 to 2% by the end of 24. We've invested in our customer success, and we spend a lot of time with our customers, making sure that they are up and running, they're happy with the system, and we are continuously developing the platform to secure that they stay on board. And 2%, really strong.
Really strong. It's really below the standard in this sector. Let's look a little bit on the earnings, or as in a company that's investing in growth, maybe a better measure. How good and efficient are you of getting top line in with the least amount of money used?
We've worked on this for the past few years. So coming from, by the end of 22, a ratio of approximately 2.5 to a ratio of 1.6 by the end of 23, and now at 0.9. We're really happy with that development, and we continuously focus on balancing the investments with the current capital to increase ARR, grow the business, and also reach our goal of becoming cash flow positive by the end of 26.
So 0.9, that means every time you use 1 crown, you get 1 top line crown in. Yeah. And with the churn of 2, you are expected to have those customers for 50 years. So I think
maybe that's a bit theoretical,
but it looks like a really good investment. Yeah. But let's look at the next year, your guidance. You're guiding 19 to 34% ARR growth, which is the important parameter. Can you talk a little bit about what are driving this growth right now for you?
Yeah, we've had quite a lot of discussions on this, actually, coming from a position with a really, really strong pipeline, seeing lots of good traction both with customers and with partners, and at the same time being in very turbulent times. I think it's really hard for all of us to come up with really clear answers to what's happening. I mean, you can just read the newspapers. Yeah. One day there's a tariff, the next day there's none, the next day it's 50% and not 25. So all of these things happening makes it a bit more blurry to try and predict where we're going, therefore a wider range. Yeah,
so a strong pipeline, but some uncertainty, because we're talking about a range from 19 to 34%. Yeah, I know you normally guide wider than normally, so this is the uncertainty you're seeing out in the world. You are very strong in Germany. Yeah. There's actually an expectations of Germany maybe going from being the sick child in Europe to a more normal growth. Maybe it's too early, but are you seeing something there, or there are still high uncertainty down there also?
I think there is still high uncertainty, I think what I've noticed, apart from the increased investment that we expect in Germany, there's also they're moving in the direction of increasing digitization, automation, etc., where they have not been the fastest. Yeah. And that's really interesting for us, because that's exactly where we come in.
Thank you, Rikke.
Welcome.